Hey traders, welcome to Charts and Coffee. Hope everyone is having a good morning. Happy Thursday, everybody. We are down to the last two trading days of the year. These are going to be trading days that no doubt are going to be some of the most volatile as we're ending something. Remember again, the psychology of something ending is markedly different than something beginning, whether that be the beginning of the day, the week, the month, the quarter, the year. The ending of something is decision time. Do I want to hold? Do I want to close? In this case, there is some notion that some positions that are down on the year could be a tax loss harvest. That's not as ripe those aren't as ripe for picking as they would be had we not had a dovish Federal Reserve right around the corner. So for those of you wondering, yeah, Rog, where's the weakness? Aren't there things that are down on the year? Aren't there things that are negative? Aren't there things that might be considered a tax loss harvest? And why or where would those not be valid? The why is the Fed. The where is the ever receding pool of things that are down. And a case in point, healthcare struggled almost all year long. And this week, of all weeks, in fact, yesterday, the healthcare XLV sector, the ETF, moved above where it started on the year. So even if by a tiny amount, it is positive on the year. And those are the kind of things that we will likely continue to see. Yes, there will be pullbacks. No, we don't know when they're going to be. Please don't make that the basis of a trading strategy. Let me guess at where an uptrend is going to pull back from. But when we see moves like this on XLV, when we see laggards moving higher, that's a whole different thing. Now, XLE energy is not benefiting from the same kind of move higher, but KRE and XLV, two absolutely hammered corners of the broader markets, are moving higher. In fact, KRE, regional banks, while they may not be positive on the year, they are actually in an uptrend. So this is that corner of the broader averages that for those pullbacks, those dramatic pullbacks we saw in March of this year. This was led by this thing. KRE then affected the Russell. KRE then affected big banks. Big banks inevitably will affect the S&P and the Dow, and on the dominoes fell until people realized, oh yeah, regional banks have little to do with big banks. In fact, the woes of the regional banks benefit the big banks, shook it off they went. But even that regional bank sector moving higher, because who doesn't like a dovish Federal Reserve? That is the overarching macro. Everything else is just fighting for a little bit of attention because the main star, right, is Jerome Powell and company cutting rates probably as soon as March of 2024. All right, gang. So that is just a quick rundown of the psychology we have going on. Hey there, Ann. How are you? Lorna did a great job on the moderating. Yeah, Ann, I agree. And that was a lot of fun. I don't know about you all. I'd be really curious. I loved the smaller group and versus just having two of us discuss what we're looking at. I enjoyed that. Not that the Brady Bunch layout is not fun in its own way too, but yeah, I definitely enjoyed hearing about Chris's experience. And what's really cool is I've always been sort of a back office, right? I've always been a retail trader. I've always been here and quite literally here in this room trading for the bulk of my career. So it was cool to listen to Chris's experience, which is a little bit more than mine by a handful of years, and his experience off the floor. So I thought that was a cool discussions. I appreciate that, Ann. I love being able to hear, for me especially, I don't talk to a lot of other traders. So I might sound funny, but I really don't. And so it was really, for me, as a listener, as a watcher, it was definitely awesome too. All right. So let's get to the questions. As always, phone lines are open for your requests. That's what we're dealing with, gang. So for those of you wondering, Rog, are you bearish? Oh my gosh, gang, it's an uptrend, right? And I really, 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 if you've been listening to people who have been warning you all year long about the hazards to come, please mute them, shut them off, change the channel, stop following, because they have cost you money, right? And that's all I can say. And sometimes Things are supposed to hurt a little bit so they're memorable. Trade what we see, not what we think. The next time some fool is running off with the mouth about inverted yield curves, say to yourself, wait a minute. Back in 2023, that kept me from getting long the NASDAQ pretty much since the end of Q1 to all-time highs. Yes, and for whatever reason, pessimists and bears are confused as experience and wisdom, while optimists and bulls are considered sort of Pollyanna and naive. Gang, again, not to be giving a little dose of medicine first thing in the morning, but really look back on your year and say, did it pay me to listen to people that were really bearish this year? All right. So keep that in mind as you're going into 2024. Keep that in mind when you're barraged by all the bearish, negative, fear-mongering headlines that are about to hit you. All right. They need to grab your attention somehow, and they're not going to grab it with good news. Okay. We are in uptrends until something changes. Please, let's go with the flow. All right. All right. So as always, one of the things that, Munair, one of the things that I really have taken note of, as have you and anyone who does read the top tier outlook, we know that SMH, the semiconductor corner of the broader averages, has been the number one performing sector of those main high concentration weighted sectors. When I talk about high concentration weighting, I'm talking about sectors that have a lot of influence on the Dow, NASDAQ, S&P, and even the Russell. SMH leads them, even above the XLK, XLC, and XLY. Tech, communications, and consumer discretionary. MU, AMD, Intel, of course, NVIDIA. These are all those names in that group. So if I'm looking at a strong index, like the NASDAQ, if I'm looking at a strong sector, like the semiconductors, I've got to have a strong stock. Yeah, and MU is a strong stock. MU is in an uptrend. And, I would put it up there with, say, the Intels of the world and the AMDs of the world. And yes, I will continue to look for opportunities to buy on the dip. I think the most important thing that I can do is focus on where the strength is. Remember, I don't want to buy at higher highs. Remember, again, just because someone's bullish doesn't mean they're buying that day. Bullish simply suggests the type of setup, at least for me anyway. It only suggests the type of setup that I'm looking for. And if the type of setup I'm looking for is long, that means I'm bullish. That's the prerequisite, if you will. So I'm not going to buy at a higher high. I don't hate my money. However, pullbacks on those days, if you're trying to learn to be a pullback trader, a buy the dip, reversions, retracements. Remember, gang, reversions and retracements are seldom going to come when there is good news. It's never going to feel quote unquote right. You're never going to be on the side of consensus. So you get really comfortable realizing that if a trend is overall heading higher, little pockets of negativity are an opportunity, right? And it's going to feel weird until you start to realize the news doesn't mean anything. And that if you just focus on the price, the last pullback on SMH was on a day that we actually bought QQQ in the Sector Secrets Mastery for the same exact reason. An overall uptrend retraced into the volatility-based support of, as you can see here, the gray zone of the daily price movement range. So yeah, I like MU, but we need another setup. All right, Airbnb. Hey there, Christopher Henry. If I'm looking at Airbnb, same thing. I'm going to ask myself the question that precedes what is Airbnb doing is going to be what sector is Airbnb weighted, if any, significantly? What is it typically going to track with? What is the narrative that benefits it? I mean, Airbnb is going to benefit from risk appetite. Airbnb is, largely going to be the kind of company that's going to benefit from, obviously, people vacationing. Right? That's pretty simple. So you ask yourself, what should be moving with Airbnb? I'm not saying that I'd like to see airlines move with Airbnb as a general confirmation, but it sure doesn't hurt, right, Christopher Henry? It sure doesn't hurt that Jets is in an uptrend. It sure doesn't hurt that Jets, the ETF on airlines, is above the 200. So think about what those accompanying sectors that think of it as more cylinders in the engine firing off. right? My gearheads out there, you know, if you get a cylinder that's missing, you're not going to get the most power out of that motor. So same thing with stocks. What are all the cylinders? So I like Airbnb in and of itself, and I love the complement of jets. Christopher Henry, buy the dip. Now, it's dipping at the moment, right? And previously, it's been able to get down to the 200 propulsion. It's also been able to hold around the middle line of the wave, so 135.35, that area would not be a bad one to view. And then Christopher Henry, one last thing, and this would apply to every setup. If you can find some price-based volume levels, some volume ledges, meaning there's size at that level already, that's a great place to find some company when you're looking for support. SOFI, it's a sub $20 stock. This for me is really all about volume. I have not yet turned on my trading view. Give me one moment here. Let me just turn it on real quick. So BLP, if I'm looking at SOFI and any stock under $20, the first thing I'm going to do is remember that it's actually a little bit less important to have a price pattern, and it's a little bit more important. Here, let me just resize this chart. It's a little bit more important to have a volume level. This could be a VWAP. This could be a volume ledge. This could be the point of control. So there's two ways to look at this. If I'm going to break down SOFI, what I would like to see is, and by the way, let's go back in time for a moment. Look at how SOFI bounced off some support here around $6.89. There's a little bit of a volume ledge there. Point of controls at 814. I would look for another volume level. I'm not going to buy a new high, right? I just can't do that. Not wired that way, but find a pullback, maybe as close as 950, and that could be useful. But I would focus almost solely on volume when looking at a stock that is sub 20 bucks. All right. Next up, Larry says, my broker has QQQ strikes at 78 after. Oh. Yeah. So here's the sitch with that. It's the, oh my gosh, that's the rebalance, I believe. The year end, right? If I'm thinking right, what was it? The dividend. I can't remember what it was. Dividend, I think. Yeah, the dividend on that one. I couldn't remember if QQQ is a dividend paying. So what happens when you have too much running around in your head? I think it's a dividend. We see this with stocks, right? When stock pays a dividend or if it splits, weird things happen to strikes. So that's all. It's not a big deal. I wouldn't worry about it. Just for me, is there usually a year end? No, this must have been a special. Hey, bot, it is a dividend. Okay, hang on. Bot says it is a dividend. Yeah, it was a special dividend. All right, thank you. Good. Yeah, thank you. Confirmation. There we go. So Larry, that's not going to change the way. Thank you, Greg. Yep. That's not going to change the way I look for opportunity in QQQ. I'm still going to look for at or slightly in the money options on the pullbacks. A few folks ask, Rob, do you go with out of the money? Here's who likes out of the money. Out of the money options are very popular with the let's buy an option for 40 cent crowd and risk all the premium. That doesn't make any sense. It mathematically doesn't make any sense to let an option go to zero to be proven wrong. You're going to know far earlier before that. And, really, if I buy something for 40 cents and it goes to 60 cents, right, it's 20 bucks, right? So remember, at the money, slightly in the money. I'd rather have a little bit of that delta in my favor, never out. So it doesn't change what I do, Larry. Thank you for the reminder, though. Of all the things going on at year end, I'm watching flows, I'm watching some volume levels, as well as the Santa rally punctuating a month-long window dressing. And then, when might we see that first window undressing pullback of Jan? Those are things. So, but thank you for the reminder. All right. Next up is, let's see here. Do we not have any other questions? I know everyone's starting to check out a little bit. It's all right. The year's winding down, gang. The volatility is going to get a little wilder. There's two ways to handle it. Anytime we're going to kind of get on the crazy volatility path, as we would at the end of a year, shorten the time frame. I mean, look at this move on NQ. Look at that move on NQ this morning. Yeah. Shorten the overall time frame to shorten the time horizon, right? Also, on the other side of that, lengthen it, right? There's two ways to deal with volatility. Either play it or go out to a time frame big enough and a time horizon big enough that it absorbs it, right? But if you're going to be in the middle, that's where the mosh pit is. So you want to be on either kind of extreme short-term time frame to capitalize on it or longer-term time frame to absorb it. And a lot of folks have been asking me, Rog, what's a good way to do that? Day trade or daily time frame swings, right? Or daily time frame swings. That would be ideal. It's in the middle. It's slightly longer term intraday time horizons that will get caught up oftentimes in the volatility. All right, how do you spot volatility-based volume? SS, I look at price-based volume, unless I misspoke, which I might have. Price-based volume or volatility-based support and resistance. Volatility-based volume? Don't know. But if I'm looking for volatility levels, that's the daily price movement range or the hourly price movement range, right? If you see red and green zones on my charts, those are hourly price movement ranges. When you see the gold and the gray on my charts, those are daily price movement ranges. They are not the same thing. They are not curated the same way. They do not plot the same way. And they have two different uses. Hourly price movement ranges, ideal. Yeah, no, that's okay, SS. I do the same thing. We have so many ideas running around in our head, right? No worries, my friend. So if you see an hourly price movement range, ideal for day trading. Daily price movement range, I like putting on a 1 hour chart, daily chart, and that's going to be an overnight, usually swing type trade. So volatility-based support and resistance, frankly, it really doesn't exist aside from this. No one, and I don't mean this in a way that is braggadocious or factually incorrect. Volatility-based support and resistance is something that I did because, and I got to give credit to some buddies of mine who said, "Hey, wait a minute, we have all this data coming in to run our chart pattern automation thing, AutoChartist. They had all this data coming in and said, I think we can find typical price movement ranges. These are called power stats back in the day. We can find price movement ranges for every stock, futures, Forex, etc. And I loved it. I wanted the data to be curated a little bit different, but the spark was there. And so now we curate that data with our own data feed in-house. But looking back, not 7 periods, 14 periods, 21 periods, but rather 6 months or greater, right? It doesn't have to be a certain amount of look back, but it has to be longer. And then what we get by curating the data the way we do, and it's not a straight average, by curating the data the way we do, we get an idea of the typical movement for a certain time of day or a certain day of week. So that's how I do it. It's not because I'm telling you got to go get the indicator. All I'm telling you is it doesn't exist anywhere else. And so daily price movement ranges, hourly price movement ranges, that is volatility-based support and resistance. So that's how I do it, SS. I had to cook up the indicator because it just didn't exist before. All right, so I appreciate that. All right, gang, as always, thank you so much for being here for Charts and Coffee. And one last question here is, hey there, Mark. I'm a futures trader, especially S&P and some options, but I'm always off timing because I'm day trading options. Which bundle would I suggest? So, Mark, the best bang for your buck by a landslide, depending on what you need. If you're looking for my indicators, if you're just starting off, grab one of the classes. I do have a class coming up in Q1. I don't have the dates. I'll get them to you. But if you're setting aside some time and some dollars, I do have a class coming up in Q1. And I have a number of indicators that are always included with the class. Trish Boss, who's my partner here in the office, always makes sure it's just a ridiculous value. On the flip side, I will tell you, If you do have a number of my indicators, I would say the next bang for your buck is going to be the mastery. All right. So it's really up to you, depending on what you need. All right. And we do trade futures, options, stocks, ETFs. Yeah, we do it all in the mastery. All right. Thank you so much, Mark. I'll see you all tomorrow, same time, same station. Be good to each other. I'll talk with you soon.